Well, hello, good morning, good afternoon, good evening. Welcome to BTA Breakout Trading Answer, the show where we talk about all things breakout trading. And today we're going to be talking about crisis, three proven tips or three proven steps to profitable trading in an economic crisis. Very timely topic today. And of course, we're joined by Mr. Breakouts himself, Thomas Nestador. Welcome, Thomas.
Thank you very much. Thank you for having me. Good morning, good afternoon, good evening from Pattaya, Thailand, and my last few days in Southeast Asia, and then I'll be back.
Oh, is that a good thing or a bad thing? Heading home.
It's um, uh, I'll tell you later.
Is that a trick question?
It is, yeah. I would stay here forever, probably. Yes.
Okay. So you've been actually traveling for how many months now? Is it 4 months?
Almost 4.5. Yes.
Almost 5. Wow, that's a long time.
That's a long time, but yeah, that's part of my life. Always been a traveler, so it's been really, really great, I have to say.
Yep, and thanks to trading, you can do that, right?
Exactly. So traders, travelers, if you like. Oh, by the way, I have to share something. So you know that I met some other trading friends here a couple of times. We had great sharing and co-working and kind of like traders retreats. But what's very interesting, so we were hanging out in cafes, Starbucks, our favorite places, and hotel lobbies. You know what's really, really neat, and I didn't expect that. I remember specifically in Chiang Mai in Thailand, we went to a Starbucks cafe and we opened our laptops and started to talk over charts and trading and stuff like that. There were like 10 guys, 10 other guys in the room. All of them were checking charts. They were all traders as well. Yes. And I was like, how comes? And then we went to a regular co-working. We saw traders again. And then we moved from Chiang Mai to Chiang Rai and then to Bangkok, Pattaya. Same story. People are traveling and trading like crazy. I've never seen something like this in my entire life. Like you can enter any Starbucks here. I bet you'll see a trader, at least one. They're everywhere. You see they have like the charts on, doing the analysis, trading.
Yeah.
It's way more common than it used to be. Like when I used to travel before, it used to be just me, period. Now you can see at least every other in the Starbucks cafe has something to do with trading. And I think it's amazing. So more and more people are actually trading and traveling and taking opportunity. And it's just awesome. It's amazing.
Wow, that sounds great. I might have to join you next year, Thomas.
Oh, yeah, that would be great.
Or
Yes,
maybe we'll have
actually.
a trading retreat and we'll get lots of traders.
Yes, Bali, that would be great. We were talking about that already as well. Would be great to go to Bali and have some traders retreat there.
Yeah.
But so many traders nowadays. It's amazing. Traveling, trading. It's doable. Come on, guys. Like everyone can do it.
Yeah. Bill says monsoon season is coming. Stay clear of Southeast Asia. Maybe.
Yeah, you have a point. Yes.
Yeah. All right. So shall we get on with the show now? We got a couple of highs in the chat. G'day, Beef. Good to see you. What's up, my friends? Let's put this on the screen. Nate said there is an echo. Maybe I don't hear an echo, Nate, so hopefully that's working for you. Stabil says, looking forward to another fantastic show. Us two, Stable Alpha, not Stabil, Stable. And Nate says, I'm picking Marbella, Spain.
Yeah, me too. Next station.
Yeah, exactly. Chris says, g'day from Oregon. Hey, Chris. And then we've got a g'day, mates from Neil.
Oh, Neil. Hi. Hi, buddy. Great.
All right. Okay. So, Thomas, the topic for today is 3 proven steps to profitable trading in an economic crisis. Now, before we get into that, though, can you explain a little bit about why you've chosen to talk about this one today?
Actually, let me start maybe a little bit differently because I was really thinking this morning how we should open this one. It's a big one and very timely, very timely. We could be, in a sense, we could be done with this episode in 1 minute because I believe there is only one important thing to share regarding crisis and trading. For traders, there's no crisis, period. If you trade, because I was thinking about this morning, I was like, So crisis, what does it really mean? So we trade short and long. We don't care whether it goes up or down. As, as as soon as we have strong direction, that's for us. So doesn't really matter. We only hate choppy markets. That's very difficult to make money on. Then we love volatility. Well, maybe not too much volatility. That I admit can be dangerous. But the volatile markets means bigger moves, higher profits. When we talk about crisis, like a lot of people say, stocks are going down, and I don't know, people are firing, being fired from jobs. I got it. That's very painful. But you're a trader. You're not getting fired from everywhere. You don't care if markets go down or up. You don't care really, pretty much what's going on. You still have every single minute. You still have the same chance to take on a long or short trade. With higher volatility, you might need bigger stop losses, but you can also have higher profits. And there is no crisis for a trader. It's just a different market dynamic. That's it. Slower, faster, maybe more volatile, but that's not a crisis. That's an opportunity. So I think when we talk about crisis, we also need to talk about mindset a little bit. I think that a crisis, like sometimes it's more in heads of people who are, too involved in the mainstream media narrative, which is mostly very negative and pessimistic because it sells more advertisement. That's been proven many, many times. And we have these tendencies to be drawing and draw this negative image, which I believe as traders we should not have. We have opportunities every second, every day. Doesn't matter what's going on. We've been there. Come on, guys.
Yeah. I like that. Thomas, you just made a quote. For traders, there is no crisis, just opportunity.
Yes, yes.
Very well done.
Yeah. But
So-
let's have a look. Okay.
Yeah,
Yeah.
sure. Go on.
Yeah, because okay, so what's going on, right? I want to show you something, guys, because so this is what's basically going on in the world right now. So we have market turbulences. Like we have the Silicon Valley Bank collapse. We have the interest rates situation. We have the Russian terrorists, the Putin situation, war, Credit Suisse bailed out. Like there's a lot of going on. So first of all, we have to ask a very genuine question. When we were living in times where there was not going on a lot in the financial sector, I don't remember such a day. I don't know if you remember, Andrew, but last year we did this presentation for the masterclass students where we deconstructing last 10 years, and headlines like this and crises like this, we have them all the time. We just forget and move to the next one. Like that's the propaganda of the mainstream media narrative to scare people, sell more advertisements, go on. So we went last year, Andrew and I, we went for our masterclass students. I think we went 20 or 30 years back. Crisis like this every year, just search headlines, you'll see them. Nothing new. This was here, is here, and will be here. Again, as I said, there's no crisis for traders, period. Now, still, you're here because you want to learn what to do. Where is the profit? And that's the key question that we can pretty much answer quite quickly if we just go a little bit back in time and let's have a look at the past. So in past, as I said, we had huge crises already. We have Lehman Brothers. We don't have to probably explain anything else. We had the terrorists attacking twins in New York. We had the WorldCom 11 billion fraud bubble. We had so many other bubbles and frauds, and banks and financial institutions. It's almost on the daily plate to be convicted from some fraud and then go away with it. So it's normal, nothing new under the universe. The key question, and that's the whole question that we need to ask to understand what to do, I believe from my point of view, is we only need to ask who was profiting. And I don't mean politicians shorting their stocks because of inside information. I mean like who was profiting among traders or regular guys like you and me, or who could have been profiting, where we have evidence, number-based, real hardcore evidence that money could have been made repeatedly, and crisis was just an opportunity, nothing more, just opportunity to do way better than the rest of the world. And that's the question we need to ask, and that's the answer we're going to reveal now. Easy.
So easy. Okay. I wish I had a drum roll. It's such a dramatic build up to the answer here.
Yeah. Okay. So let's have a look.
Yeah.
Guys, there's so much evidence. It's almost mind blowing how easy it is. So this is one of. I'm just trying to zoom in a little bit. Let me just make it bigger.
It's a bit small,
so I
isn't
can.
it?
Yeah. So I can see it. I know.
I think
Yeah.
we can
Okay.
do...
I see it now. My son. Okay. So I want you to really have a focus on this chart, which pretty much tells the whole story. So Lehman bankruptcy, huge one. Stocks 22% down. Was there a winner? Managed futures. Managed futures. So what is managed futures? Managed futures, if you don't know, guys, that's a very fancy term for algorithmic commodity trading. Basically, managed futures means trading future contracts, future commodities. That's what we do with Andrew and in BTA, period. And then manage means that you do them systematically. You have systematic entry and exit rules. So nowadays it means mostly algorithmically, not necessarily always, but mostly. So managed futures, Lehman bankruptcy made money. WorldCom scandal, minus 17.3% US stocks, managed futures plus 18 on average among managed futures CTA managers, plus 18. Terrorist attack, minus 14.7 stocks, plus 3.9 managed futures. Greek downgrade, European deep financial crisis, minus 13.9 US stocks, plus 2.4 managed futures. Tech bubble, minus 13.4 US stocks, plus 15, almost 16% managed futures. Early stages of recession 2001, minus 12 stocks, plus almost 11 managed futures. Flash crash 2010, minus 11.5 US stocks, minus 3.1. So we're already looking back 10, 13, 14, 15 years to the history, and we see the same pattern again and again. Managed futures perform well in any circumstances, including crises, including the biggest financial crisis we had in the last decade or two. And they massively overperform stocks or any other traditional investment like bonds or real estate as well. That's all proven. We can move to the next chart. Quite an interesting as well. So this is, again, stocks against managed futures in a nice visual thing. We can go even deeper to history. Fed rate hike 1994. So we're already talking 30 years back. Managed futures winner. Long-term capital management. I don't know if you ever heard about this one. That was one of the biggest failures in the financial history. That was so serious that you have no idea how serious it was. Stocks minus 20% down. Winners, managed futures. Dot-com bubble, huge one. 50% down stocks. Managed futures up. Again, the 9/11, managed futures up. Credit crisis, minus 50% stocks. Overall, managed futures up. We can move to the next slide.
You mean there's more evidence?
There's even more evidence. COVID COVID pandemic, guys. That was crazy. That was insane. That was the like what can be a better recent proof of resilience and potential of managed futures. Have a look. Everything sunk. Everything. Like global macro strategies, multi strategies, long short credit strategies, long short equity strategies, S&P, everything sunk, everything under the water. The winner, managed future. Managed futures, again, untouched, doing their own usual things, maybe not profiting greatly for a period of time, but still being very resilient, very robust, and being very ready to make profit in any circumstances. And we can there's even more evidence which we can just look up at the internet, but I think this is more than enough from my point of view. And I keep saying this again and again: if you want to make money in any crisis, not just this one or future one, or like, if you want to make money in crisis, you have potential, you have opportunity every single day, with the most proven way to profit in times of economic crisis ever, which has been documented, proven. We have hardcore evidence, and that is, drum roll, ta-dam, so easy. You already know,
I
guys.
think we've picked up on the trend.
Trade futures.
Futures.
That's it, guys. Trade futures, make it algorithmic. If you trade it algorithmic, you have less work compared to what it used to work before. Of course, you have to do some coding, watching, overseeing, but it's still not without work. But like in the past, they had to watch every tick chart, do it discretionally. That these days are gone. Trade futures, it's proven. It's there are opportunities today, tomorrow, next week, next month. Doesn't matter what's the economy. In futures, you have opportunities every single day. Period. Proven. Data driven. That's all I can say.
I think we need to also state that all of that data is not our analysis. It's from investment firms and using Morningstar returns data and things like that. So it's all none of it is our research. It's all research from third parties. And I found it
Yes,
quite interesting to see that not a single instance was there stocks beat futures in average returns, which is surprising. So
I agree. I don't understand why people trade stocks, because from my point of view, stocks are very limiting. It's difficult to short them. You have a lot of, let's say, regulation that it's not always highly favorable. And I think that managing futures is way safer, in a sense easier, at least from the standpoint of regulation, and can be way more profitable. So I think the days of stocks are gone, and they have been gone 20 years ago already.
okay, so that's the first one, right? So we've decided that the best market to trade in an economic crisis is futures. As we've seen the data over, I think it went back further than 19 years, Thomas. I think the WorldCom thing was in the 1990s at some stage. So 20 to 30 years ago,
Yeah.
we've seen all those economic crises. Futures was the best market to be in. Now, now that we have that knowledge, what do we do?
Yeah, so I promised three key points, three tips. So this is the first one. And then, I think the rest is just a common sense. So what do you need to make money in every circumstance? So it's always the same. There are plenty of different approaches to trading, to markets, but we're here, the Breakout show, talking about breakout trading. So, as a breakout trader, you need something that moves, which is futures. They always move somewhere, always, all the time. You just don't know which future market will be the next biggest mover. So, of course, you need to diversify. Always, always, always. But it's the same with stocks. It's the same with any investment. You want to be diversified. You cannot bet just on one single futures. It's good to trade at least three, four different markets, which are low correlated. That's where you hedge markets against each other. So diversification always has been and always will be very important part. And then I believe that if you take the most proven crisis proven market, which is futures, and combine it with a kind of momentum strategy, which allows you to profit on these big sharp moves, especially that we have, especially in crisis, and diversify a little bit, you have the winning formula. And of course, when I talk about momentum strategy, I'm talking about breakout strategy, because breakout strategy picks up on a momentum. That's the combination. And I want to just show you, you don't need to have hundreds of markets. So this is a portfolio of just 5 future strategies: E-mini S&P 500, Japanese yen, soybeans, gasoline, and wheat. Everyone can make a futures algorithmic portfolio like this. These are algorithmic, 100% algorithmic breakout trading strategies. E-mini S&P, super simple market. Japanese yen, maybe a little bit harder, but doable. Soybeans, maybe a little bit harder, but doable. Gasoline, very easy market to develop a breakout strategy on. Wheat, maybe again, it needs a little bit of time, but totally doable. We have low correlated markets mostly. Maybe there's some correlation between soybeans and wheat, but we're talking about completely different markets. This is 5 markets. It's a small portfolio. It might not go as well as this example in the future, but even if it plays just half as well, it's already great. And it's futures. It's proven, crisis proven. This is 10 years, so that went through, like this sample size includes the past crisis as well. So for me, the formula, 3 parts formula is like this. And I really stay behind this one, not like a crisis proven, but crisis opportunity formula. So we can move to the next slide. So 3 points, define the formula. We skipped one. Okay. We had it maybe slide before. So yeah. So
really no other slide.
Okay.
It's missing
it's
from
gone.
here.
Yeah. Missing.
Sorry about that.
So the formula is futures, breakout, diversification, as I showed to you on that 5 markets example. That's it. That's the formula. Futures markets, diversification, breakout strategies. And then I added the last slide. If you guys still struggle to develop breakout strategies or don't know where to start, if you're a newbie to futures trading or algorithmic trading, especially breakout trading, don't forget, this is a very fast, easy guide how to start building your first portfolio. But besides, let me repeat, there is no crisis for traders. There are opportunities. That's it.
That's brilliant. I love that quote. We're going to have to get it done with a big picture of your face. How about that? We'll plaster it everywhere in social media.
Please no.
No, I think it's an important quote, though, because it's a definite mindset shift. And when you shift the way you're thinking about things, you get a completely different perspective and different results. So I think, it's funny just to say, oh, that's a great quote, we should use that. But it's really, I think it's important to, as you mentioned, mindset at the beginning, that, we need to adjust our mindset for the situation to be able to see the opportunities.
And also, like very practically. So I told you, we've been meeting here with other friends, also traders. Do you think we even mention crisis once? We don't even bother to talk about this. For us, like we're super excited because we saw a lot of ideas, new tips, new tricks, and we don't even think whether there is crisis or not. We're just talking. Okay, let's put this strategy on next month. Let's test this new idea on micros. Let's do this, and we don't. In our heads, it doesn't matter. It goes up, goes down. That's all we need to know. We did notice some, scary headlines, but that's nothing new. There are always scary headlines. We are aware of the Silicon Valley Bank and credit crisis and stuff like that. But when you sit in front of charts and working on actual trading, you're even more excited You're even like, oh, that's so great. I cannot wait to launch this new strategy. The environment is perfect for this strategy. So it's a mindset. Mindset needs to stay focused on the opportunity, not on what the mainstream media are paid for, which is to scare people.
Yeah, they do a pretty good job at that as well, don't they?
Yeah, they professionals. Professionals being connected to politicians. So one big mafia. Yes, keeping people. How you say it, on the leash? On the leash?
Yeah,
Yeah,
that sounds right. Yeah, keeping them on the
yeah.
leash. Yeah. Don't get too political, Thomas. We'll get banned. You got to be careful. That's another
Yeah, that's
problem.
true. That's true. Yeah, no politics, guys. Sorry,
We're here for
taking
trading,
back.
not politics.
Yeah, trading opportunities,
Yeah.
plenty of them, every second, every day.
Yeah, exactly. Now, Thomas, this is a first. We don't have any questions in the chat. I can't believe it. I think maybe what we're doing is what's the saying? Preaching to the converted. But there is a comment here from Nate. It's always a good time to buy when everyone is freaking out.
That's timeless, Nate.
Yeah.
Yeah, you're right. Exactly. Timeless truth, right? Hallelujah. Oh wow! Now we're being religious. Okay, so no hallelujah, no politics, no religions, only trading.
Oh, we got a comment here from Shiva. Hey Shiva, I didn't see you here before.
Oh hey Shiva.
Great perspective. More news crisis is more volatility equals more breakout opportunities.
Yes, simple.
Summed that up right there. Yeah. And here we go. Neil's done a even shorter summary for us. Thanks, Neil. Futures, breakout, diversification. You got it.
I think Neil, you got it. I think you got it.
All right, we do have a question now. I spoke too soon. Stable Alpha's got one for you, Thomas. Let me just put this on the screen. Stable wants to know, in your breakout strategies, do you use any shorter term order flow data like Delta, Stack, and Bull, or just mainly technical analysis?
Just simple stuff like the breakout strategies we trade are really simple, no fancy stuff. We could write another book about complexities and how fancy stuff like order flow and delta and like that complicate technically algorithmic trading. So we keep it simple. Even with simple strategies, there are still a lot of technical obstacles and challenges. I think Andrew could have write a book about it. He's quite a professional in revealing all these tricks. We keep it as simple as you can just imagine. Like our breakout strategies. Just read the book, please. It's just point of initiation, space, time, filter. We use simple filters, ADX, DMI, RSI, nothing complicated, nothing fancy, simple.
Yep. Thanks for the question, Stable. And a question here from Nate. Do you find the first hour of trading sets the high and low for the session?
Yeah, sometimes, and with some markets, I think it can be. Not always, not like a golden rule, but definitely the first hour of trading session. For sure, there's a lot of noise. The first trading hours, for sure, it can pre-anticipate or take some course or direction. But again, I don't think about it that much. Like the breakout is breakout, right? Wherever the breakout happens, we go with it. We don't need to. We do the kind of analysis like whether we should take the breakout the first third of the session or the second third or last third or in pre-market. This kind of analysis can help. But otherwise, breakout is a breakout. Like we don't go to this level of micromanagement. We have a just simple formula, which just again you can get it in the book. Simple formula. Wherever the volatility is and the breakout happens, we're in. That's it. Simple, not micro analysis, not complications.
Yeah, Nate said he noticed 80% of the time the high low is set by 10:30. Just an observation.
I assume, Nate, maybe you're talking about indexes. Definitely,
Yeah.
I agree that by 10:30, there's a lot of work already done for indexes. That's a good observation.
Yep. Okay. We got a few more questions in the chat here. Oh, Stable said, great. I like simple. And then Nate somewhere said, keep it simple, stupid. Keep it simple, silly. Yeah. So simple. Now, there was a question here. Okay, we've got a couple of questions here. Here's another one from Shiva. Has there been a news event in the past because of which you turned off your strategies for a few days or a small period?
Yes. Negative prices on crude oil. That was wild. Like that was even beyond my comprehension. Getting negative prices on crude oil.
So what was the reasoning behind it though? It wasn't just negative prices, right? How did you justify switching your crude oil strategies off?
So this happened during COVID, and
Yeah.
what we I didn't believe we could ever see negative prices on futures. I was not ready for that. I was ready for everything, including kind of little bit, markets like in COVID, because that all was in past. But negative prices, that's something I did not believe that could have happened, and it did happen. So that really
Yeah.
set me off. That was complete imbalance. So we switch off crude, and then I remember the first month of COVID, we switch off indexes, all the indexes. There was more volatility than I expected, and that was somehow scary. So that's these are these are two things, two circumstances I can remember. But if we
Yeah.
talk about crises like the Silicon Valley Bank and stuff like that, that's almost old boring news, because that's something that kind of like almost it sounds like a big one on the news, but we had so many of them in the past that this is not a huge, like massive event from point of markets or trading. It is in media, but we had so many similar events in the past already.
Yeah. Okay, so we've got a question here from Papa. Let me put this on the screen. It's a bit of a two-parter, so I'll read both parts, and then I think it'll make more sense. So, what futures contract would you recommend for high volatility versus commissions in the outside of regular trading hours? And the second part is, I normally trade Nasdaq during the regular markets.
I
What would you
think the
recommend
previous
for out of hours?
I think the previous question included Australian and Asian markets, right?
Well,
Was he asking
he said
specifically?
in those times. So
In those times,
he
okay,
trades
okay,
Nasdaq during the day. What do you recommend for out of hours, which is the Asian times?
okay. So regarding indexes, doesn't matter. It's coincidentally, I did some analysis lately. Pre-market indexes, pre-market, it's great. I would probably start with the pre-market. Doesn't matter when. You can start from the midnight US time till 8:30, the regular opening. Great, absolutely great. Aftermarket, little bit different story, little bit more challenging, but still opportunities. But pre-market, I'm building deliberately some strategies which will trade only in pre-market right now, because the pre-market, great. I love the pre-market,
Yep. As long as the liquidity's there, right?
which is
Which is
it's
plenty
so
in
much better compared to what it used to be.
in indexes. Now there was a question here about exits. I'm just trying to find it in the chat because there's so many comments. Oh, here we go from Stable. Let me put this on the screen. Do you find you use more coded exits or just simple fixed dollar amounts?
Fixed dollars amounts a lot. That's we did a lot of research, and just this super simple exit works great. And coded exits, some of them, I personally like a very simple one, which is number of bars since entry, which is a simple one. I think, Andrew, you like it as well, right?
Yep.
That's a good one. Simple to code, simple to test. So that's more coded probably compared to dollar amounts, but both of them work great. Simple.
Yeah. Okay. I'm just scanning through the chat to make sure I didn't miss any questions. I think I got them all, Thomas. We got a few thank yous. Papa says he was in the Philippines and got stuck, and it sucks staying up late at night to catch regular hours. So he's obviously wants to trade, but different hours. So yeah, that's good, Papa. Glad the question could help you, or the answer, I should say. Thomas, I think we're done with all the. We've got a couple of comments here. How about we share these and then we'll start wrapping up. So Nate says, always turn off before a report. The algos are turned off because Globex machine swings wildly to match odd limit orders on the book. Yeah, it can get pretty crazy in announcement time. I think that Shiva said, thanks for the examples on when you stopped trading. And that's it. I think we got them all, Thomas. So if I missed your question, please post it in the chat. You've got like 30 seconds and we're going to start wrapping this up. So thanks for joining us today. If you enjoyed what Thomas had to share, you enjoyed the question and the answers, please give us a thumbs up for the video. And make sure you hit subscribe and the little bell button on the screen so that you get notified when we release more information. Did you give a thumbs down, Thomas?
No, I was like, here is the subscription button here.
I don't know where it is on the screen. Is it bottom right? It might be where you just pointed.
On YouTube. Yeah, I believe it is.
I think it is, yeah. Okay.
Yes.
All right. Let me just do a final chat. Okay. Checking the chat. Ed said, g'day, Ed. Great stuff. Stable said, great show. And thank you. So thanks again for joining us today. Thomas, any parting words, closing words before
yes,
we finish?
please, Andrew. Could you wrap it up with the thing that you said you'll put in a banner and put it on the... What was the quote?
Oh, what was the quote? Yeah, I can find it in the chat. Was for traders, there is no crisis,
That's
just
a good
opportunity. Here we go. I'll put it up on the screen and we'll finish for that one. So that summarizes it all in 1 minute.
Yeah. For traders, there is no crisis, just opportunity. So please remember that one and stay with the futures.
Go futures. All right.
Yeah, go futures. Yes, go futures.
Maybe we should get a T-shirt done. Go futures.
Go futures. That would be a good one. Yes.
All right, guys. Thank you for joining us today. Thank you again, Thomas, for sharing such great information and your knowledge. And we'll catch you again in 2 weeks' time.
Thank you very much, guys. See you in 2 weeks. Bye-bye.